Hi everyone, this is Dr. K. Shobha from Gfgc Hoskote. Let us move on to the next problem under the LIFO method. From the following transactions, prepare stores ledger account using LIFO method. On Jan 1st, opening stock 200 pieces at rupees 2 per piece. On January 2nd, issued 150 pieces. On Jan 5th, purchased 100 pieces at 2.20 per piece. On January 10th, purchased 150 pieces at 2.40 per piece. On January 20th, purchased 180 pieces at 2.50 per piece. On February 2nd, issued 150 pieces. On February 7th, issued 100 pieces. On February 12th, issued 100 pieces. On February 28th, issued 200 pieces. This is about the problem. Let us move on to the problem how to calculate under the FIFO method. On January 1st, opening stock, already they have given in the problem. Look at the problem here. Opening stock is 200 pieces at 2 per piece. So, the same opening stock we have been taken under the particulars 200 at the rate of rupees 2 and the amounted to 400. Next. On January 2nd, issued 150 pieces. See here, on January 2nd, issued 150 pieces. See, already we have only one balance here under the LIFO method. Earlier, we don't have the balance. So, under whatever the balance we had 200, from that we can directly issue to the issues department. That is 150 at the rate of rupees 2 amounted to 300. Out of 200, you have issued 150. What is the balance available with us now is 50 at the rate of rupees 2 amounted to 100. Next up. On 5th, purchased 100 pieces at 2.20 per piece. Already I told you for your purchases only, we are going to have the rate. For the issues, we need to take the rate what already we have purchased. On 5th, purchased 100 at the rate of rupees 2.2 and amounted to 220. See, now we need to go for the balancing immediately after the purchase. See, already we have a balance of 50 rupees, 50 units amounted to rupees 2. Rate per unit is 2 amounted to 100. Now we have purchased. How much we have been purchased? 100. Take that balance here on 5th January. 100, 2.2 amounted to 220. Next, on 7th January, we have issued. How many units we have been issued? 100 units were being issued. Now, see, we are following under the last in, first out. Now, last balance we had around 100 units. First, you directly issue to the production department under the LIFO method. 100 was being issued to the production department. The cost per unit is same, amounted to 220. Out of 100, we have issued 100. Now, the balance is available only 50 rupees, 50 units with us. Take the same balance 50 at the rate of rupees 2 amounted to 100. Next, on 10th January, see, we have purchased. How many units we have been purchased? 150 units was being purchased. And what is the cost per unit? 2.4. Amounted to 3.60. Amounted to 360 rupees. Now, we need to go for the balancing. See, earlier balance we had 50 units. Now we have been purchased 150 units. Take the same balances here. Earlier balance 50 we had and recent purchase we had 150. Okay, at the rate of rupees 2.4 amounted to 360. Next, on 12th January issued. How many units were been issued? 100 units was issued. Now, say, now go back to your balance. On 10th January, we had a balance of 50 and 150. Under the FIFO method, last balance what we had from that, we supposed to issue to the production department. Now, we had the last balance was 150 units. From out of 150, issue to the production department 100 units. The cost per unit is 2.4, amounted to 240. Now, what is the balance we need to be taken here is earlier balance 50 rupees carry the same here. The cost per unit is 2, same 100, that is the amount. That is also same here. Now, out of 150, we have issued 100, and what is the balance we have here is 50, 2.4, and the amounted to 120. Next, on 20th Jan, purchased 180 units at the cost of 2.5. That is, what is the amount we have? 450. Now, we don't have any issues here. What is the balance? Earlier we had the balance of 50, and recent we had 50, and now we have purchased 180 units. And purchased is 180. Same, take it as a balance here. The balance should be carried same. On 20th Jan, we have issued total 200 units. First, last in, first out. Last balance was 180 units. Issued that 180 units, and the cost per unit is 2.5, amounted to 450. And out of that, now the second lot, what we had is 50. Last in, first out. Already you have issued 180, and next you are supposed to go for 50 at the cost per unit is 2.4, amounted to 120. Out of 50, issue 20, because we need to issue 200. 200 is the total here. So we have issued 200. 20, and cost per unit is 2.4, amounted to 48. Out of 50, we have issued 20, and what is the balance we have now? 30 is the balance, and cost per unit is 2.4, amounted to 72. Now, after preparing the FIFO method, the balance of issues, now we need to go for the closing stock. The closing stock in the organization are 50 units at rupees 2 per unit. That is costing to 100 rupees, and 30 units at the rate of rupees 2.4 per unit, amounted to 72. This is how we need to be calculated. I hope you all got it now. Earlier already we have done one problem with full of clarifications, and now let us move on to the next problem. Prepare stores ledger account under the LIFO method. Date, receipts, rate, issues. On second, for receipts is nothing but the purchases. They have given 200 units. For your purchases, always they are going to give the rate. And for the issues, you are not going to have the rate, because we need to take whatever the purchase you have done, from that only we are going to issue to the production department. So for that reason, for the issues, we are not going to have the rate here. On 10th, 300 units, 2.40, because this is receipts. The rate will be given. Okay. And on 15th March, there is no receipts. We have, there is no rate is been given, and only the issues they have been given 250 units. On 18th March, 250 units is the receipts. Rate is 2.60. Issues will not be there. So on 20th March, receipts is not given, rate will not be there, and the issues is on 20th March is 200. So if you practice this problem, consider this as an assignment. Hope you all understood. Thank you.